Hey everybody, this video is about how to start investing in the stock market for beginners. I'll focus on the Australian stock market, the ASX, CompSec as a broker, and I'm also help you get your finances in order before you start investing. For YouTube policy and guideline reasons, I must say this is not financial advice. You must do your own research before doing investing. Even though that I've got 12 years of experience in the stock market, I have not got any certificates or diplomas in this area, so you must seek advice from a qualified professional in this industry. Things we'll talk about in this video is: can you afford to invest? How much can you afford to invest? How do you want to invest? What is a dividend and franking credit stocks? What is a broker and brokerage fees? How to set up a CompSec account, how to research stocks, and how to buy and sell shares. So with your finances, what I do and what I recommend you to do is have 4 bank accounts. You have your income, daily, billing, and savings account, where your income, daily, and billing is just a standard account where you only have a debit card to your daily and your billing account. With your savings account, you do have to read the policy and guidelines to see if you can actually transfer money in and out when you wish and the amount that you wish, or if that money has to be in there for a certain amount of time. So income account, you want to set up a separate income account to actually track who has and hasn't paid you and how much they've paid you as well. And also to see in that money that they paid you, you might be from work, YouTube, Twitch, from the stock market, might be from other incomes, what has been paid tax and what hasn't been paid tax. So at tax time, I just have to get a bank statement from this one account and go through it and see what has and hasn't been paid tax. If I can pay the tax man for the don't come after me. Once a week, I'll go to my income account and I'll transfer it to my other accounts. For my daily account, I keep a maximum of $2,000 in this account. If I'm going on a holiday or I'm doing Christmas shopping where I need the extra money, I'll transfer it from my savings account to this account where I'll spend that money. But generally, I only have $2,000 in this account, just in case if I lose this card for this account, they can only take that $2,000. They cannot touch any of my money in my other accounts. So I use this every day to buy, it might be a pie or coffee, it might be drinks, fuel, might be that little bit of shopping, new pair of boots, socks, underwear, shirts, just that tiny little bit. It's not there to do big shopping trips like Christmas or a bunch of birthday presents. It's just for that little bit of shopping that you do every day. I have my billing account separate if I don't accidentally spend that money that I need for my bills. So these are for them bills that you're going to have to pay. It might be your personal loan, car loan, school, phone bills, might be a house payment. You know how much them bills are and you know when they are. So you keep them in this account before you don't accidentally spend that money. So I have minimum of 3 months worth of payments in this account. So for example, every month if I spend $3,000 on my bills, I would have $9,000 in this account for my bills. The reason why I have that is because if I keep too much money in this account, I'm losing money on the interest that I would have get if they in my savings account, or that money that I would get if I invest. So with the savings account, before you start investing, before you do any investing, you need an emergency fund. If you get a flat tire, if your vehicle get a flat battery, a rock might go through your windshield, you might lose your job, you need an emergency fund. And I say have at least $10,000 in that account before you start investing. That $10,000 is not for investing. It's for any unplanned bills, basically. It's your emergency fund. It's not for investing. It's not to buy Christmas presents with. It's not to go on holidays. It's there for emergencies only. For other stuff, you will have to save money on top of that. So for me personally, I keep $50,000 in my savings account. So that $50,000, I have a $20,000 emergency fund. And then I have $30,000 to do basically whatever I want for the year. So it might be for Christmas presents, birthday presents, might be for a holiday, might be upgrade something in my studio, might want to buy a new motorbike, or if the stock market goes down and I know it's going to go back up, and my favourite stocks that I want to invest more money in, I might take $10,000 to $20,000 from that 50 and invest in. I use my savings account a little bit different because I have more in there and have a $20,000 emergency fund and basically $30,000 to basically play with. So when I get money in, I top up my daily account, $2,000, my billing account, $9,000, top up my savings back up to that 50, then what money is left over, I invest with. So with your finances, to know if you can afford to invest and how much to invest, you want to do a spreadsheet. So I'm just using Microsoft Excel here. There's a lot of tutorials on how to make a spreadsheet in Microsoft Excel. The two things I'll tell you that a lot of tutorials don't is when you're doing finance, you want to left click, drag, right click, go to number format, and then just make sure it's select currency, press OK, and that'll just help you with your spreadsheet. You only have to put in the numbers and hit enter, automatically put in all the different icons for you. For this example, I just have my work income. I just have that at $2,000, just as an example. So you just put $2,000, hit enter. Then YouTube, I just put 100 for example. And then here it shows you $2,000 for your work income, $100 for YouTube. Each of these lines here are 2 weeks. I'll have it 2 weeks just so I can see all my yearly income and expenses on one page. I don't have to scroll up and down to see the whole thing. For me, I'm a visual learner, so me seeing the whole thing in one go helps me a lot. And all my bills anyway comes in weekly, fortnightly, which is every 2 weeks, or monthly, so it easily fits in this setup. So for your total income, what you want to do is press equals, then sum, SUM, shift 9 to put in the bracket, select the ones that you want added up, hit enter, and then it shows you your total income, $2,100. And then for the year, I have a total income of $56,700. And for your expenses, you want to do the same thing, equals, sum, bracket. You want to select all your bills, and then select your total income, hit enter, and then it'll show you what's left over after you minus all your expenses. To do a minus, you just hit minus, type in your numbers, hit enter, and then it shows you what is left over after that period. So once you have set up all your incomes, leave 1 or 2 spare for incomes just in case you make money in the future, buy a second job, or YouTube, Twitch, you might make and sell craft items. You do your total, put in all your bills. More detail you can make this really helps you. So put all them bills that you know you're going to have to pay every week, 2 weeks, month first. And then after that, you might have a section where you do Christmas presents, where you would do a budget for that, birthday presents, and all that. More detail you make it, the better outcome it will be. So once you've done all that, you can see for the expenses, I have a total of $45,500 for the year. So that leaves me with $11,200 left over for the year. So I know I can afford to invest. And now that money, after I've saved up that $10,000 minimum for that emergency fund, I probably would invest $4,000, maybe $5,000. You do want to leave a little bit of money left over for things that you might purchase daily. So your coffees, drinks, sandwiches, go out for lunch, or go out in town with friends, or go to the movies. That stuff as well. If you don't have a budget for that, it'll come out of this. So you do want to leave a little bit of money behind for that as well. I can see here that I do have money left over. So you see what weeks that you can afford to invest. Like the first 2 weeks here, I have $150 left over. I can't invest anything that week. Same with here. Them weeks, I won't be investing anything because I can't afford to invest, because any of my daily bills will be that 150 or that 200, because all them daily bills that I don't budget for will come out of this $150. So yeah, I have $550, so I might invest $200 for that one. Yeah, $400. I might decide to invest $100. Yeah, $600. I might invest $400. $350. I might skip that one. Go to $650. I might invest $300. So you just go through and you figure out where you can invest and how much. That probably will be about that $5,000 mark. So once you do that, you can move on. So before I move on, I'd just like to explain what is a stock and what is a share, just in case you're not quite sure. So a stock is, so imagine you want to invest in Commonwealth Bank. If you live in Australia, you will know Commonwealth Bank. So you want to invest in them. How you do that? You buy their stock. You go on your whatever brokerage site you use. I use CommSec, which is owned and run by Commonwealth Bank. So you do that, you look up Commonwealth Bank and you buy their stock. In their stock is their shares. Their shares are the percentage of that stock. So a stock can have thousands, tens of thousands, hundreds of thousands, millions or billions of shares in that stock. So the shares are just a percentage of that stock. So there are 3 ways that you can invest in the stock market. I'm only going to tell you 2 of these ways because the third way has a lot more risk. If you don't know what you're doing, you can lose a lot of money. So these 2 ways, they are still risky. They are not risk-free. And the reason why I tell you to have $10,000 in an emergency fund is just in case you lose this money you invest, or you have to live without this money for months to years before you get a return in this money. So the 2 ways are a dividend stock, which is you buy it low, you sell high for profit. The dividend stock is you buy low, you hold it, you get paid the dividend. Then you can sell it high for profit, or you can buy low, hold it, get paid the dividend. Then you can hold it again, get paid that dividend, and so on and so on. But when you buy and sell shares in a stock, you have to pay a brokerage fee to your broker. So what is a broker? A stockbroker is an individual or a company that buys and sells stocks and other investments in a financial market, participating in return for a commission, markup, or fee. In most countries, they are registered as a broker or a broker-dealer and may need to hold a relevant license and may be a member of a stock exchange. So I use CommSec as my broker. CommSec is Australia's largest online stock brokerage firm. It is a subsidiary of the Commonwealth Bank. Through its online trading platform constitute the vast majority of its business. It is also offers a telephone-based stockbroker service and investment advice service. So with CommSec, if you set up a CDIA account with them, their brokerage fees are a lot lower. When you sign up for an account with them, there's 2 different ways you can set up a CommSec account. If you already bank with Commonwealth, you can set up with them through that way. If you don't bank with Commonwealth Bank, you can set up a CDIA account with them. That helps. That gives you a lot lower brokerage fee because it's a account with them directly. If you have, say, a NAB bank account and you want to use that, your brokerage fees will be a lot more than just setting up a account with CommSec directly. For example, so if you buy or sell Australian stocks, they're the ASX stocks, these will be your brokerage fees at the timing of recording for this video. So up to $1,000, you only pay $5 in brokerage fees. Up to a $1,000 transaction, so that's buying or selling, you'll be charged a $5 brokerage fee. That's the minimum you'll be charged. If you want to use a third-party account, such as a NAB account through CommSec, up to $15,000, you'll be charged $99.95. Over $15,000, you'll be charged 0.66% of that money above $15,000. So you set up an account with CommSec. For $25,000, you'll only be charged $29.95. Compare that to the $99.95 for only $15,000. So we'll save you money in the long term to set up an account with CommSec directly. So when you buy into a company for the very first time, $500 minimum that you have to buy of shares. It doesn't matter if them shares are $100 each or 1 cent each. You have to buy $500 worth of shares in each stock. After that, if you want to buy just 1 share, that's worth 1 cent, you can, but you will be charged that $5. Make sure you're buying or selling a good value of stocks in each transaction to make that brokerage fee worth it. So it'll work like this. For a non-dividend stock example, you buy 10 shares for $100 each for a total of $1,000 plus that $5 brokerage fee because it's at that $1,000 limit. You sell them 10 shares for $150 for a total of $1,500 plus that $10 brokerage fee because now you're above that $1,000, so you can't pay that $5 anymore. You must pay that $10. So you turned $1,000 into $1,500. Sounds great, right? But you have to minus the $15 from them brokerage fees, and you have to minus taxes as well because you made a profit. So with a dividend stock, it works a little bit different. You buy 10 shares, $100 each, for a total of $1,000 plus that $5 brokerage fee. You hold them 10 shares until you paid that dividend. We'll say you get paid 5% of that of price per share of $100. You can sell or hold them 10 shares to get paid that dividend again and again. Or if you choose to sell them 10 shares for $150 for a total of $1,500 minus the $15 of the brokerage fees and minus the taxes, depending on the franking credit, you might pay no taxes on the dividend payments. So you can hold them shares, you get paid that money again and again and again. You pay that dividend again and again and again, and you might not have to pay any taxes on that depending on the franking credit. So what is franking credit? Franking credit, or franked, is your share of tax paid by the company that you hold the shares in from the profit which the dividends are paid from. So at 0% franked, you will need to pay all the tax from that dividend payment. At 100% dividend, you will pay no tax because that tax has already been paid by the company from where the dividend payment came from on your behalf. Alright, I'll show you how to set up a CommSec account. I am using the PC version of CommSec. They do have a mobile app they can use as well. So you go to commsec.com.au and it'll bring you to this page. So you press on Get Started, and here it's just telling you a bit of information about CommSec on how it works. So you press Join Now. Are you already a CommSec customer? I'm just going to select No for the purpose of this video. If you're a CommBank customer, do you already have a NetBank client number? So if you're already a customer, you press Yes. I'm just going to press No. So how would you like to trade? You can trade with your own money or you can trade with margin loans. Trade with your own money. Do not trade with margin loans, especially if you're new at this. You can lose your backside very quickly because you're borrowing money to invest in the trade market. And if it goes wrong, you're losing a lot of money. So select which account you want to open. You can select individual where it's just you. If you select joint where it's you and a friend, you guys will be taxed 50-50. So you just go next. So these are the things you need to know before you continue. You must be over 18 years old. You know your personal details, most likely your driver license or passport, Australian residential address, a valid email, mobile number, tax file number, tax residential for information for Australians and overseas. So trading with your own money is just telling you some information about your brokerage fees on how much you pay per transaction. Here's just saying select what account you want to trade from. If you want to open a CDIA account or use your own bank account with another bank, not with Commonwealth Bank, I do select picking the CDIA account for your brokerage fees will be a lot cheaper. Here's just saying where are you a tax resident. Say Australian and overseas or overseas. Then here you select your tax file number, then enter your tax file number. So here they're just asking permission to share your bank account details with a third party that handles payments such as your dividend payments. So once you hit continue, they'll process that ID check and they'll set up your account and they'll send you the account details in your emails. And from there you take the details I provide you and sign in to your CommSec account. So once you sign in, you'll go to the home page that gives you a little bit of your personal information, but also about information about what the stock has been doing recently. Next to that is your profile. It shows you how much money you have in your account that's not invested. Then it shows you how much money you have got invested. And then your changes for that day as well, if you're up or down in stock price. Next to that, you have your watch lists. So with me, I got multiple lists. So I got my 2 that are all my shares that I look at. Have 2 pages of dividend stocks that I look at. I've got a page of non-dividend stocks. I don't buy that many non-dividend stocks. I pretty much all buy dividend stocks. They're my favourites: mining companies, banks, different companies in healthcare, technology, retail, finance, energy, and I've got a couple other ones there as well. So I do research a stock. We just go to research, find and filter stocks. So here we are. And say you want to look into dividend stocks. So to help you decide what to look at, you go add. So I'll just select dividend yield and franking, and that'll give me a good idea. Give it a second for the stocks to adjust. There we go. So here you just select on any. I'll go Yancoal because that's one of the ones I know. So Yancoal is in energy. So you see here, gives a bit of information. Last couple of months, what it has done. So it was on March 10th, 2023. It was at $6.85. And then currently at the 4th of February, it's at $5.94. It's currently a Sunday, market isn't open, so it's not going to do any changes today. And while I'm talking about this, the Australian market, it runs from Monday to Friday from 10 to 4 p.m. It is not open on any public holidays. So it's only open for 6 hours, the Australian stock market, Monday to Friday. So because I want that dividend, go here to dividends, and it'll show you information what the stock has been doing. They only just started doing franking credits on their dividends. So they only just actually start paying 100% of all the tax that you would have to pay on that income. They've only just started paying that. So these are now 100%. So you don't have to pay any tax on that dividend. You only have to pay tax if you sell the share itself for a higher price than what you bought it at. The things you want to look at is the current price now, then what has it done over the previous 52 weeks. So you look over here, it was at highest it's been in the last 52 weeks was $6.96. So the lowest it's been over the 52 weeks was $4.35. So it's pretty stable stock over the last year basically. And you go over here to the charts to get a bit more information. So I always fill it in. So over the last year, you can see what it's done. So it was at $5.98 basically. Then it did hit a peak of $6.85. Then it dropped, got all the way down to $4.38. Now it's all come back up. But if we look over the last, 5 years, you can just see what it's done. It was at $3.20, now $5.94. The good thing to look at is when they actually pay out, what months they pay out. So this one they pay out twice a year. So the ex-dividend date is the date they have to earn it by, and then this is the date that they were actually paid that money out. So they pay out generally in April and September. And you see here over the last couple of years, they've actually started paying a dividend in 2018. So it was at 29 cents, then 32, then nothing in 2020, most likely because of COVID. But actually, if you look here, it was 21 cents. So this just wasn't updated. And then 70 cents, and then $1.23. So they are doing pretty well. So this is actually one of my best stocks out there. So when I look at how to invest in companies, I look at what is my return if I invest $5,000 in them. I hardly ever buy into non-dividend stocks, so I'll pretty much always buy into dividend stocks. So see how much money they can pay me back in dividends if I invest $5,000 in each. $5,000 is a good number. If you do a couple hundred or $1,000, you don't really see your return and what level the return is. So this one of the companies that you want to buy, you just go into buy, and then here they'll ask you for some information. So the stock code is YAL, Yancoal. So you can go quantity or value at what price. So right now the market is closed, so I can't select market price, but I want to buy a quantity of say 200 at $5.94. So that will cost me $1,180 to buy them shares. And then because it's over that $1,000, I'll be charged the $10 brokerage fee. If I actually drop that down, $150. Yes, now I'm below $1,000, so it only charged me $4.99 brokerage fee. So that's pretty good. So this, and to sell it is the same. You just do the opposite. You go sell, and when you just want to select the quantity, how much you want to sell by, and the expiry date. So is this good for just today, or is it a certain time frame you want it to end by, where you might set this and forget it? That'll do for these videos, guys. Please do leave a like and subscribe. I do appreciate that, guys, and I'll see you guys next time.